2017. We'll start this ride to where we are today. And in 2017, it was an unusual time, Carrie, because precious metals had gone from a all-time high in 2011 with $50 silver and 1920 or $30 gold, and it had gone down for 6 years to 2017. And at that point, central banks were selling gold, and cryptocurrencies were taking off, and equity markets were doing well. And it was a rough time to own a precious metals business. And there were days I didn't want to come into work. Yeah, it was 6 out of 10 orders that we placed in 2017 were sell orders. People were selling and going into Bitcoin and just capitulating. Yeah. So all of a sudden in 2017, we see the German Bundesbank make a very big stink about repatriating their gold. Now they had talked about it for a few years earlier and nothing really happened. Now they make a big stink in the media. We want all our gold back from the New York Fed. And it was unusual that in the midst of a 6-year bear market, a central bank, the Bundesbank, is publicly demanding their gold be sent back from the New York Fed. Within a few months of that happening, the Bank of Austria, the Bank of Hungary, the Bank of Turkey, the Bank of Poland, the Czech National Bank, all of these banks said the exact same thing. My inclination is that they were told, get your gold back because in 2 years, something's going to happen. So in 2018, after all of these banks being net sellers for years, these exact same banks that pulled all their gold back, as a group, they bought more gold than they did in the 60 years previously combined. So now you see massive repatriation and massive accumulation. And now it's got my attention. And I'm at the time, the Sprott Show, showing charts of this, showing how gold is being suppressed at the AM and the PM fix, talking about manipulation and the central banks accumulating gold. But the real story starts 2019. And this is when everything, the doors or the windows or the sky parted, the seas parted, the clouds parted, everything just started to click for me when in 2019, those same banks who as a group bought more gold together than they did in the previous 60 years combined, in 2019, those numbers were up almost 100%. Now they're massively accumulating gold, they're repatriating it, removing counterparty risk, and then the first biggest event of my career happened. 2019, after all of this gold accumulation by the Eastern European central banks and repatriation from the New York Fed and the Bank of England, the Bank of International Settlements, which is the central banker's central bank, the most powerful and influential bank in the world in Basel, Switzerland, said to the world, gold is now a tier 1 reserve asset. Yes. So the most powerful bank in the world just told everyone that gold is the only other tier 1 reserve asset in the world other than US dollars and treasuries. It makes a little bit more sense when you think about, hey, maybe someone whispered in these countries' ears, hey, get your stuff back. Gold is now tier 1 or is gonna be, start buying it before everyone catches on. Yeah, and so this is why the central banks would typically sell gold, especially the new kids who take over for the gray hairs, where gold had been viewed as wealth and money to the gray hairs. The new kids look at it as an archaic relic that pays no interest and costs money to store. And because it was tier 3, only 50% was calculated on the balance sheet, which would denigrate the ability to sell bonds and do business. If you sell the gold and at this point in history, gold had been off the radar for a very long time. Mm-hmm. And so, these countries would say, hey, let's sell the gold. It's earning nothing but dust. We're paying storage fees. Our balance sheet is hurt by it. We can buy US treasuries, make a return on our investment. The money's guaranteed by the US government. Our balance sheet is whole again. We have no storage costs. So yeah, it incentivized them to do that. So now out of nowhere, and the question is why? Why gold? A lot of people in our industry thought it would be SDR, special drawing rights from the International Monetary Fund, but no, it's gold. This archaic relic that no one has wanted for a very long time is now the world's only tier 1 reserve asset. So 2020 comes along, the banks are really accumulating gold. And I see something now that is really piquing my interest. And I have wondered for a very long time why very few people have talked about this. And I looked at it as the second biggest event of my career, and that is the Chinese Belt Road and Rail Initiative. And this is something, to this day, I can't understand why more people are not screaming about the Belt Road Initiative. It is the largest infrastructure project in human history. You got the IMF that comes out in 2020 and says, we want a new Bretton Woods. Well, the dollar was anointed world reserve currency at Bretton Woods. The IMF says, we want a new Bretton Woods. That's 195 countries from around the world who now say, we want a new system. Well, that got my interest. And then we see the rise of something that was very unusual. And on the COMEX market, I don't want to go too far down this rabbit hole, but the COMEX market is the price setting commodity exchange of the world. And contracts on the COMEX rarely stand for delivery, but you are able to stand for delivery. And, you know, when oil went to negative $40, as an example, nobody wanted to take delivery, but they had to. So had to basically be paid to take delivery. So in any case, it is an option. Delivery is an option. So in the years past, all the years that I've watched the COMEX market, every week they publish a report, and it's called the Commitment of Traders Report. And the Commitment of Traders Report shows the positioning of the biggest traders in the world and on the exchange, and it's always two groups. It's the commercial banks and the speculators, called the specs, the hedge funds. And as one goes long, the other goes short, and vice versa. But in 2020, out of nowhere, we see a third group of reportables pop up onto the Commitment of Traders Report, and they call them the others. And these are thought to be sovereign wealth funds and family offices, much like the central banks have been doing. And you wonder, I mean, are sovereign wealth funds, central bankers wearing a different ball cap? Because all of a sudden, we start to see withdrawals off the COMEX market. That has continued to this day. But these withdrawals, as an example, in 2020, we saw more gold taken off the exchange in 1 year than the Bank of Japan has in their official holdings. We saw as much silver withdrawn, actually physically taken off, bye-bye, we don't know where it went, than we have ever seen in a decade. So you have all of a sudden huge private money doing the exact same thing that the central banks are doing. They are accumulating and they are removing counterparty risk. They are pulling things off. So now things are starting to fit a little tighter together. We've got all of these things that are happening, but none of it really starts to really come together until 2021.